After posting moderate losses yesterday, WTI futures bounced back largely over global news flow. First, we heard reports of two ports in Libya being blocked by protesters. Also, news that Chinese imports for the month of August were up 8% year over year. Also, ANZ put out a report that worldwide air travel up 35% year over year. Also, some news flow with regards to Iran and whether it's realistic that we'll see exports from the country in 2021. The rest of the trading day, price action remained in a volatile range, but a narrow range at the same time. We saw the crack spread drop 57 cents on the day. We also saw news flow with regards to production out of the Gulf Coast, down 80% or 12% of the U.S. refineries action being shut down, and not a whole lot of news on timeline when they're back online. Other than that, the dollar is stable and not changing the narrative a whole lot. EIA report is delayed by 1 day due to the Labor Day holiday, but they did put out a report about the drilled but uncompleted wells. That's down to a low that we haven't seen since November of 2017. Speaking of the EIA report that's due out tomorrow, consensus is expecting a draw of 7.4 million barrels. And traders do know that inventories right now on a 5-year average are about 6.7% below. Production, though, last week was a 15-month high. So there's going to be an interesting report tomorrow. Now, looking at CME Group CVOL, October options, 1 month, 3 month basis, trading about the 25th percentile. At the money, vols are higher. Both the up variance and down variance are higher. The up variance is up more, so that would infer that skew is higher, which it is. Largest volume in October, the 70-71 calls. And also the 69.5 put, which actually is the volume leader for the day, followed by the 69 put. Lastly, the CME WTI Micro Mini futures introduced not so long ago continue to grow in volume, liquidity, and open interest.